the more I start looking at the technicals of a lot of sectors, I'm starting to realize that we're in some very shaky ground, guys. Okay? You're going to see crazy things that I think we probably never seen before. And the reason why I say that is, first, I want to talk about how long could we be in this really frothy market. Two, how to invest in this market. Okay, so if you're new to the channel, welcome. I know we got a bunch of new subscribers and love the activity, guys. You guys are asking great questions. Obviously, this is not investment advice. This is just my opinion, guys. If you've been following my channel, and I'm sorry if I'm repeating myself, but I have to let new subscribers and new people that are coming to the channel know exactly what's been going on. We've basically called an end of a business cycle. Two indicators that let you know that you're at the end of a business cycle is going to be interest rates rising and inflation. So I was trying to get us ahead of this move, and I'm going to show you exactly what that looks like. So when you go into, if you come down off of a peak and you're going into a recession, possibly a depression. Now, I'm not saying we are, but I definitely think there's definitely some recessionary signals flashing here, okay? And personally, guys, I think we're going to be trading sideways for the next 18 to 24 months. And if you are new to investing, or if you're just starting to build a portfolio, this is a great time to start building a philosophy and start building a portfolio in this down market, in my opinion, guys. Okay, once again, this is just my opinion. Do not YOLO into any stocks, guys. It is very volatile. You dollar cost average into stocks that present opportunities. But let's get into exactly how to shift your portfolio to benefit from business cycles. So when we go from a peak to a recession or possibly depression, there's three major sectors that I personally, my mind goes to right away. And I'm sorry if this is repeated information, but people that are new to the channel need to hear this as well. And that's going to be consumer staples, right? That's going to be consumer staples, utilities, and some healthcare. Okay, those are kind of where my mind goes. You guys know I like SoFi. I'm putting them up there. They're probably one of the more popular stocks that are talked about on YouTube. Another stock I'm going to put up here is going to be Pltr. Okay, this is another high growth stock. A stock that's been talked about a lot on the channel. This is a 3-month chart of these two stocks. Now I can put any stock up here. I can put another growth stock up there. I'll put Ttcf because that's another one that gets talked about a lot, right? Tattooed Chef. And we'll give that one a yellow. Okay. Are you guys seeing the common pattern here? Okay. You have this nice spike up and then a complete sell-off, and they're all almost down around the same percentage points. Okay. You got one down 34% in 3 months. You got one down 43% in 3 months, and you got one down 52% in 3 months. Okay. What did I say would do well peak heading into possible recession? I said consumer staples. What's a big consumer staples name? Let's go with Campbell's Soup. I'm sure you're all familiar with Campbell's. What's another big consumer name? How about Coca-Cola? Are you guys seeing what's happening here? Okay. Nice trend up, very slight trend up for the consumer staples, 9.5% and 8.4% in 3 months. So Campbell's Soup is up 8.4% and Coca-Cola is up 9.5%. All right. Both of them pay a dividend, by the way. And if you're not familiar with dividends, every quarter or every month or every year, they pay shareholders back that are invested in their company with proceeds. And that is essentially a dividend. It's not a guarantee, but most of these companies have been paying dividends for over 25 years. So almost like a guarantee. All right. So you get paid dividends along with having pretty steady growth throughout the last 3 months. Now, I'm sure we all know the volatility of what's been going on in the market. Does it look like these prices are very volatile to you? Not really. Not huge spikes, not huge dips, right? So that is the power of understanding where you are in the business cycle, all right? I want you guys to understand that, because when I've been talking about a barbell approach, I think a lot of people are just like, yeah, whatever. And the truth of it is, I do like growth. I want growth exposure. But right now, I don't think you need to rush to growth. And I still don't. I think there's still possibly some more room to move. Okay. And we're going to go over charts here in a minute. But guys, this is the importance of understanding balance in a portfolio, right? Do you want your portfolio to be down 50%? Or if you barbell approach it with something like, something like Coca-Cola, you might only be down 20% or 25%, right? So that's a huge difference, guys. It's yielding something, right? So yeah, you might be down 20%, but you're also getting a 2% dividend. So that way there, if you're down 20% on the year, net dividend, you're down 18% on the year, okay? So it really does help to have a balanced approach and understand where you are in the business cycle. If we get another drawdown on Intel, that would be something I would look to barbell approach to a growth stock, okay? So maybe if Intel sells off on Monday and it gets a little cheaper, maybe I would buy some Intel and buy a little bit more SoFi, okay? And that's where my mind goes, okay? I want to have growth, but I also want low beta, guys. What low beta is basically being able to take the volatility out as much as you possibly can, right? You don't want your balance jumping all over the place because that will make you an emotional wreck in the end. It's nice to be able to build a portfolio, okay? I want you guys to think long term, all right? This is going to get extremely ugly in my opinion, okay? I think we're gonna see some crazy behavior, desperation, if you will, that could cause the market to really turn in either direction. There's a lot of people that are well capitalized, okay, and that can leverage that money. So I'm just using Meet Kevin for example because we all know, some of the stuff he's been doing. But if Meet Kevin decided to leverage $20 million, he can turn that $20 million into like a $50 or $60 million move, which means he could move a stock pretty hard in either direction, okay, if you leverage that 20 million. The opportunity is for you. The opportunity is for you. When they do that, you have to know what you own and what you're wanting to buy and have a plan, okay? Because when those prices present themselves, you need to be able to buy with confidence. So guys, what you're looking at right now is a 3-year chart on the SPY. And obviously you guys know that this dip right here was the pandemic dip, I guess you can call it. And we've done nothing but go up in a straight line, okay? If I were to draw a line, a trend line, I would say this is about where it would go, okay? So the reason why I am making this video is I don't want to scare anybody, but I do think there's a chance this is going to get worse. We have basically just broke a major uptrend, okay? Is the SPY going to finally settle down? Now, if it wasn't for Microsoft, or if it wasn't for Apple, I think we would actually be in a very, very bad spot, guys. I'm going to be completely honest. 431 mark. We pretty much closed right around 431 or 432 today. We closed at 431.24, okay? Why is the market going up? Apple reported great earnings. They hold a huge weight into the S&P 500, into the SPY. So we're getting a nice bounce off of that. I am not so sure that we are going to maintain this bounce, okay? The chart is due for a bounce, as we can see by the RSI down here. Okay, that's very oversold conditions. So we're naturally going to get some sort of bounce back up. Just right around a 10% downward move, I believe, just under a 10% downward move. When we go to the Russell, guys, and a lot of the stocks we talk about here are going to coordinate well with the Russell. Personally, guys, the Russell has more downward movement to go. Okay, I think it has another 12 to 14% down. So we have a SPY. We got a couple things to talk about here, guys. We have an end of a business cycle, right? Which is going to cause volatility. It's going to cause tightening. It's going to cause actual life to change, okay? Whether that's a higher interest rate, we're going to feel that. We're going to feel inflation. We're going to feel the gas. We're going to feel it at the gas pump. We're going to feel it when we go grocery shopping. We're going to feel it when we refinance our homes or when we go to buy a home and interest rates are higher. So there's going to be a lot of economic things that we're actually going to feel, okay, coming in the next few months. Along with that, both of these charts look extremely weak and vulnerable right now. So with everything that I'm saying, guys, and the reason why I'm doing this video is somebody asked me if they should buy, sell, or hold on a stock. And I really can't give that advice. What I would say for me personally, guys, unless if a high quality stock is a screaming buy, I'm really not interested in making any sort of purchases right now until we see on the charts that there's some stability. Okay? We haven't really seen the reaction of when the Feds actually raise rates and what the true reaction of the initial the knee-jerk reaction is going to be of the market. Okay, we don't know what that is yet. You have a lot of small caps that are down 60, 70, 80%. Robinhood went from $85, and it hit a low today of, actually hit a low of $9 today. $9.77, from $85 down to $9.77. Best time to buy stocks, guys. The closer they are to zero, the better the deal you're going to get if it's a good company, right? So I think we're going to see a lot of that. I think we're going to see great buying opportunities over the next 18 months. And you can't try to time the bottom on this kind of move, guys, because I think it's going to be extremely volatile. I think it's going to be extremely scary. You can't try to time the move on these. You have to be patient and you have to have a plan, right? You have to know where you are in the business cycle. If we head into a recession and depression, it's going to get a lot worse. It's going to get a lot worse. And you need to have cash to protect yourself in real life, but also to take advantage of the buying opportunities that you can get in the market, okay? Guys, these are my opinions. Hopefully I'm not scaring anybody. We've had good earnings from Microsoft. We've had good earnings from Apple, and they carry a huge weight, and we're pretty much floating at support. So just my 2 cents, guys. As always, I appreciate your time. Thank you so much for spending it with me, and we will see you next time, investors.